Something major is happening inside the Ethereum ecosystem right now. And while most investors are focused on price charts and daily market movements, a much bigger battle is unfolding behind the scenes. This isn't just another software update or technical proposal. This is a fight over the future direction of Ethereum itself. A growing group of developers, researchers, and influential voices within the ecosystem are now pushing for a dramatic reduction in Ethereum's issuance rate, a move that could permanently change how the network functions and how ETH is valued in the years ahead. On the surface, the proposal sounds simple: create less new Ethereum. But beneath that simple idea lies a debate about power, security, decentralization, institutional influence, and the long-term survival of one of the most important blockchain networks in the world. What makes this story so fascinating is that it arrives at a moment when Ethereum is attracting more institutional money than ever before. ETFs are growing, large treasury companies are accumulating ETH, and staking participation continues to climb. Yet some experts are now warning that Ethereum's biggest threat may not come from outside competitors. It may come from its own success. To understand why this debate has become so explosive, we need to look at what has happened over the past few years. After Ethereum successfully transitioned from proof of work to proof of stake, the network created a new economic model where users could lock up their ETH and earn rewards for helping secure the blockchain. The system worked exactly as intended. More people staked their ETH, security increased, and confidence in the network grew. But as time passed, a new problem began to emerge. The incentives were so attractive that more and more ETH started moving into staking. Large institutions entered the market. Exchange-traded funds gained traction. Major staking providers expanded rapidly. What initially looked like a sign of strength slowly started raising concerns among Ethereum insiders. The question became whether too much staking could eventually create risks that threaten the very principles Ethereum was designed to protect. Today, nearly one-third of all Ethereum in circulation is already staked, and that number continues to rise. Every day, more investors choose to lock their ETH because the rewards are attractive and the process has become increasingly accessible. But according to some of the people closest to Ethereum's development, this trend could create long-term challenges. One of the biggest concerns is concentration. As staking grows, larger entities tend to attract even more capital. Investors often choose established platforms because they appear safer and easier to use. Over time, this creates a situation where a relatively small number of organizations control an increasingly large share of the network's validators. While Ethereum remains decentralized today, critics of the current trajectory argue that unchecked growth in staking could gradually shift too much influence toward a handful of dominant players. This is where the issuance reduction proposal enters the picture. Supporters argue that Ethereum currently pays out more rewards than necessary to maintain security. They believe the network could remain just as secure while issuing significantly less new ETH every year. Their reasoning is straightforward. If fewer coins are created, holders experience less dilution. Scarcity increases. The asset potentially becomes more attractive from an investment perspective. Most importantly, the incentive to endlessly move more ETH into staking begins to slow down. In other words, reducing issuance could help restore balance to the ecosystem before staking becomes excessively dominant. Advocates view this as a proactive step designed to protect Ethereum's future rather than a reaction to an immediate crisis. The debate has attracted attention from some of the biggest names in crypto because the implications extend far beyond staking rewards. Large institutions that are building Ethereum-focused investment products are watching closely. Asset managers understand that investors care deeply about monetary policy. If Ethereum can present itself as a more scarce and disciplined asset, that could strengthen its position in the broader digital asset market. Supporters frequently compare the situation to Bitcoin's halving cycles. Bitcoin's predictable reductions in new supply have become one of its most powerful narratives. While Ethereum operates differently, some believe that reducing issuance would send a similar message to the market that the network is committed to protecting long-term value rather than maximizing short-term rewards. However, not everyone is convinced. Staking service providers may face difficult questions if issuance is reduced. Lower issuance typically means lower yields. Lower yields can make staking less attractive. Businesses that have built revenue streams around staking rewards could find themselves operating in a more competitive environment. Some critics worry that reducing rewards too aggressively could discourage participation and weaken security over time. Others argue that the market should be allowed to determine the natural balance rather than relying on protocol changes. These concerns have transformed what might have been a technical discussion into a much larger debate about incentives, governance, and economic design. What makes this story particularly important is that it reflects Ethereum's evolution from a technology project into a global financial system. A decade ago, Ethereum was largely an experiment driven by developers and crypto enthusiasts. Today, it sits at the center of a rapidly expanding ecosystem that includes institutions, governments, corporations, and investors from around the world. Decisions made within the Ethereum community now have consequences that extend far beyond blockchain circles. When developers discuss monetary policy, markets pay attention. When researchers propose changes to issuance, institutional investors listen. The network has reached a scale where even small adjustments can influence billions of dollars in value and shape perceptions about the future of digital finance. At the heart of the controversy is a deeper philosophical question. What should Ethereum prioritize in the years ahead? Should it focus on maximizing participation in staking? Should it emphasize scarcity and monetary discipline? Or should it seek a delicate balance between the two? There are no easy answers. Too little staking could weaken security. Too much staking could concentrate power and reduce liquidity. Every decision involves trade-offs. That reality has forced Ethereum's community to confront issues that many successful systems eventually face. Growth creates complexity. Success introduces new risks. The very mechanisms that drive expansion can eventually generate vulnerabilities if left unchecked. The timing of this debate is especially significant because Ethereum is entering a new phase of competition. The blockchain industry is evolving rapidly. New networks continue emerging. Institutional adoption is accelerating. Governments are developing regulatory frameworks. Meanwhile, Ethereum's developers are pursuing ambitious upgrades designed to improve scalability, efficiency, and user experience. Many supporters believe that reducing issuance would complement these efforts by strengthening Ethereum's economic foundation. They argue that technological leadership alone is not enough. A successful financial asset must also maintain a credible monetary policy capable of supporting long-term confidence. As discussions continue, one thing has become clear. This debate is no longer about a simple adjustment to staking rewards. It has become a referendum on Ethereum's future identity. The outcome could influence how investors view ETH, how institutions allocate capital, and how developers approach future upgrades. More importantly, it could reveal how decentralized communities make difficult decisions when powerful economic interests are involved. The way Ethereum navigates this challenge may become a model for other blockchain networks facing similar questions in the years ahead. For now, the proposal remains under discussion, and the final outcome is far from certain. But regardless of what happens, the conversation itself highlights how much Ethereum has changed. The network is no longer fighting for survival. It is no longer trying to prove that blockchain technology works. Instead, it is wrestling with the responsibilities that come with becoming one of the most influential financial platforms in the world. The choices made today could shape Ethereum's trajectory for years to come. They could determine whether the network maintains its balance between decentralization and efficiency, between growth and sustainability, between institutional adoption and community governance. And that is why so many people are paying attention. Because this isn't just a debate about issuance. It is a debate about the future of Ethereum itself.